has started or not. All right, so you're welcome back. All right, you're welcome back. This evening we are going to look at how to perfect our understanding of the market. So in this video, in this training session, we are going to start with resetting our indicators on the screen, on the chart, so that every one of you, so what you are seeing on the screen right now is what we call the naked chart. I've not added any indicator to the chart right now. So it's a raw chart, no indicator added. If I move down to the smaller time frames, you can see the one, and see how each one was trending upwards. So I took a trade on that basis. So when you are direction of the the higher time frames, you are at a higher level of making correct entries than all right. So that is it. I want to set the indicators on the screen, the chart for you right now. So the first one we'll be adding to our chart should be the stochastic oscillator. And you guys know its usage. It's normally used to determine the overbought and oversold levels. As I told you, if you go to the F, where the F is, you tap on it, then come down to either one.
Not just my hack, my this that, my note,
right.
My rib, every skeletal system.
Let's move ahead now. My screen. Hope you guys can see the screen now. It's not sure. Is it showing on top? It is showing. Okay. So we are adding those indicators that we have been using on the screen. They are just there to actually be guiding you as to how the market is going to it's moving and all that. How the market is moving and all that. All right. So the first one we want to add is the stochastic oscillator, which tells us how the market is overbought or oversold. I told you that you always take a trade when the market is fully oversold or fully overbought. What does it mean? And you actually look at the trend of the market before you make sure you take a decision based on that. So if the market is trending upwards, then you see that when it reaches oversold fully, the possibility of it shooting upwards stronger is higher than if you are going against the trend. Anytime we try going against the trend, we always encounter problems. So our main trend line is the 50 moving average exponential one, right? So in this particular case, let's try to actually place our indicator on the screen. So we tap the F at the top middle here. Then we scale down. We see that these are the trend ones. We come to oscillators. And the oscillators will find stochastic oscillator to tell us whether the market is overbought or oversold. Well, I told you the market is fully dependent on supply and demand. And I think I explained it better in the previous video, that supply, when the market is fully oversold, that means the sellers have been selling and they have oversold. So supply is at the lowest level. That is when they have oversold. That's what it means. Oversell means that supply goes to the lowest level. The price has actually grown to the lowest level. And now, when price has grown to the lowest level, suppliers actually want to wait. So everybody wants to sell at the highest price, you buy low and then sell high. When it has reached an oversold level, then they will start buying down. They start buying down. So demand will come. But they are going to chase the lowest prices, because they realize that the market has reached a level where prices are very low. By that particular time, suppliers are not ready to supply again. So demand is going to exceed supply. And that is where the market is going, the price is going to shoot up in that direction. Because when demand actually increases and the people are willing to supply that currency or sell more of the currency, then obviously there will be higher demand over supply, and that will lead to price increase. So that's what you see happening on your screen. So the stochastic will tell you when it has reached that lowest level for you to take a decision to buy. So that's an indicator. We call them indicators. Indicate a level where you must enter and buy or enter and sell. But yes, so that is what it is. When you tap on your stochastic oscillator, the only thing you have to change here is the levels. So the levels you see by default is 28, but here, 28, but here, change it to 1090. So you tap on the levels, the pencil there, and then change to 1090. That's all. Then you go to done. It's on your screen for you. All right. Yeah. It's on your screen for you. So that's how it is. As you can see on your screen, the stochastic tells you when the market reaches an oversold and overbought, and for you to take the buy or the sell. Now, I'm going to show you what actually is happening on the screen right now based on the stochastic. You see the stochastic here. When it's coming down, it came down here like this, and that's exactly what the stochastic was showing here. This is the level here. You realize that it enters. So I want to see where it has entered a zone. Very well. Okay, so here you realize that the stochastic on the H1 entered a zone. very, very well at this level. Whereas it has entered the overbought zone here very, very well. Very, very well. Are you getting my point? And as it was also going up, it's indicating that on the chart too, the price was going up within the range. So the stochastic was showing as the price is going up, stochastic will be showing exactly where the price or the market is going. I get my point. So you can actually follow that particular. So it's an indicator indicating the momentum or the movement of the market in a specified period of time. It may not be the whole day, it may be some few minutes, it may be some 10 to 6 within. We spend a period, but here we use the default. I get your point. So in this case, it has reached an overbought here. And what happened? As it's reached the overbought here, now you can see that there is a turn in the price to the downside. And that's what you see over here. A turn the price to the downside. And because same turn from there to the downside. Because that's proven to be so. All right, so I believe you guys are getting the picture of the stochastic later. So overbought and then the oversold levels. I get my point. Overbought and oversold levels. So when it enters the range below the 10 level, it has entered the oversold level. Both the red and the green stochastic lines you are seeing here, they have entered that level, then rising up again. So if the stochastic green line is crossing the red one upward as they are in their zone, then it should give you a signal that the buyers are now taking over because the sellers have sold the lowest point and now you start buying because prices have become low. And then you start buying from there heavily. And since supply will not be going on again, obviously demand will see and price will surely increase. Supply and demand. So that is it. 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 So that is what you have seen here. And the market was going. So that's the concept. So just full concept. If you understand it, easy to actually manipulate. I get to the point. Easy to manipulate. And that is the concept you're going to use in analyzing the market all the time. I get to the point. All right. So now, which other indicator have we been using in conjunction with the stochastic? In the indicators we use 3, and in the time frames we use major 3. So look at it. Perfect. That's it. That's how it is. So now look at it. Let's add second indicator to the screen. Second indicator that we are looking at right now is what? The awesome oscillator. It's also an oscillator, and it also gives us a picture of how the market is moving, whether the market has a momentum towards a certain direction or it will be dropping towards another direction. So let's go to the F and then add it to the indicator window. And awesome oscillator is at the last place, the Williams. So over there, when you tap on the awesome oscillator, don't go to set anything, just tap on done, then it will be added to your screen. All right, so that's it. That is it. That is it. It's added to your screen. Added to your screen. Now, when you see how the market is right now, it's telling you that the market is in a very strong. Looking at the awesome oscillator, look at the nature of the awesome oscillator. See that it has a very small potential. Look at how it has built up here. Very potential, small build up on the downside, but a very strong build up on the upper side. So when the price is moving, it's going to move to the upper side better than the downside because you see that the market is already in an uptrend. The market is already in an uptrend. And let's look at the lower time frames and see the effect on them as well. When you see the lower time frames, whereas the lower time frame on the M30 is also moving from a higher high point. So when it moves move from this level, it couldn't, when it got to this point, it could not move down again. And so it's began going up again. That means that the potential, the momentum to the upside is very strong. Yes. So when it moved from here, it got to this particular point. It couldn't come down to reach this level. Then it went up. So when it was coming down, it got blocked up here again. And then the potential of going up is also very high. That's how it is. That's what on the screen. Very, very powerful over there. It's showing you something very serious. All right. So I believe you guys really understand what the stochastic oscillator is and what the oscillator also signify on your screen on the chart. Right. So let's look at something. Let's look at something. How are we going to do that? Let's add our trend line. Let's add our moving averages that we said we added as chart. Moving averages. What are these averages? What are these moving averages? The moving averages that we add to the screen are the 3-period moving average, 10-period moving average, and then 50-period exponential moving average. So watch carefully. I believe all of you have some your notepads, your pen and paper with you, so you can put down what actually I'm talking about. So the 3-period moving average, what is it? That's what we are going to look at right now. So let's add the first moving average, the 3-period moving average. So let's tap on our F. Now we'll add the main chart. So we go to the main chart. Then under the trend, we look for moving average. So moving average, we count 1, 2, 3, 4, 5. Moving average is there. So the first one is 3-period moving average. So I think on my screen is there already. So I'll just, if you are setting it, the period you set it to 3, then the method is exponential. The style you can try to change based on your own preference, whether it should be big or small, and the colors you use for each of them will be dependent on your own preference. All right. So Miss Helen, which color do you use for your 3-period moving average? Miss Helen.
The 3 is black.
What about the 10? Blue. And what about the 50? The 50.
The 50 I use light green.
Light green. Okay. So that is Miss Helen's preference, in terms of choosing colors for the moving average. Right. All right. So that's how yours might also be different. Right. So I use red for the 3 moving average right now. So let's go down. So as I move to down, you see it on the screen right now. So I'm going to the next moving average right now. So to add the next one, I'll tap on the F, go to the main chart, then choose moving average again. You realize that it will still display the previous one. So now going to change the period 10. So 10, then it's the same exponential, so you can set to use exponential. Then now I'll come and change the color to somewhere violet. Yes. Then that's all for me. Yeah, so I go to done, and then it's added to the screen. All right, so let's move to the last one. Exponential moving average. Tap on the F, go to the plus sign, the name, chart, moving average, then change the period to 50. It's still exponential, so then the color I like blue for the big one. Then done. All right, so that is it. That is it over there. Now you can see that the 15 minutes has actually crossed to the upside, and it's agreeing with the general trend from the H1. General trend from the H1. You can see that the 50 moving average is constantly in an uptrend right now, and that any position you are taking should be in line with that. That means that since it's going up, you should look for positions where you can trade the upside. That is, you should be looking for buys all the time. But before you look for buy, you now scale down to the lower time frame, maybe 10-15, and look for a support zone. And what do I mean by a support zone? I explain. Support zone is a zone where price was dropping and has actually supported for that first. That means that, okay, let me just give you a typical example on the 15 minutes time frame live on this particular channel. All right, so I'll choose my object, tap on the screen, drag it down. I see that the price was dropping from here, particular place. All right, so you realize that the price, general price was dropping and it goes to this place. When it got to this place, something happened. It could not continue again. It stopped, and a green one took over. So now you can see that the green candle now took over from here, the upside. So this particular place, now look at it. So now you are going to see how you can also be marking your levels or your points where the market reversed. So as it was coming down earlier, got to this point, and then so the suppliers were supplying, they got to this point, and they actually gave up, give the opportunity to the buyers to continue. So you see the green candle here has taken over from the red candle here. It's now the hands of the bulls. The bulls mean the buyers, and the bears means the sellers. All right, so that is how it is over here. Now, so these points, now let me show you now the point I'm talking about right now is here. So these points, as you can see on the screen, where it has stopped, the point where it was going down, price was going down and got interrupted, got reversed to the upper side. That point is the support level. So where I marked with the rectangle is the support level. So it's a major support level, and it took place on the trend line correctly. So it's a support level. So the price was going down. Now the simple way I've been telling you guys to understand it is what when you are falling, all right, so you're welcome. But as I told you, when you are on your bicycle for support and resistance and all these things. Yeah, that's a normal thing. Right, so welcome back once again. I think yeah, welcome back. I think the network is worrying.
Yes,
All right, welcome back once again. This our network are taking me off right now, and I welcome you back. Okay, can you guys see the screen now?
Yeah.
Oh, can you see the screen? Yes. Okay. All right. So we are back into the house. The thing continues. We are talking about the support and resistance levels. And so I've shown you what the support is. I was on the support issue. I've demonstrated how if the market, the price is coming down, as I said over here, it started from the top here, and then it is coming down, it reaches this level. Now it reverses into the upper side. You know, when you are talking about forex trading, you're talking about the price moving up and down. It doesn't, when they say the price is going to go up or it's going to buy or increase, doesn't mean that you just be increasing in that order until you hit your take profit. No. It can come down. That's why you need to set stop losses, do your calculations. That's why I told you that those things you are going to take them very serious. If you are trading, you want to trade with confidence, without worry. You know, you calculate how much you are putting on that trade as a risk. So our risks, we call something RR. Risk in forex, we call something RR. Who can tell me what that means? Who knows what R is to R means? Has somebody any idea concerning that? R is to R. If you have any idea, you can let me know. R is to R. Who has any idea concerning that?
The R is to R, I think, is the risk reward ratio or something like that. That is
yeah, that's it. That's exactly the R is to R. So the R is to R is what? The risk to reward ratio. And the risk is the amount you want to place on the trade. For a particular trade, you have analyzed the gold or euro, the XAU USD, XAU USD, that is the gold. You analyze the chart, go to the higher time frame H1, and then based on the H1, so that on the H1 to what I mark on the M15 is what actually happened on the H1. That's that here. So on the H1, it respected the block over here, which is the support level here you are seeing over here, where I draw the block, which is that transparent block there. So as the market was going down, got there and it was resisted. Sorry, it was actually supported. Either there were some forces that actually supported it not to go down again. So it reversed into the upper side and then it started moving up from this particular level, and it started moving up to this level. So that is the support level. And so when you are entering a trade, that okay, though you have entered this support level, maybe the market can still come down a bit before shooting upwards in your favor. So to avoid too much loss of maybe the market coming down against you, set a level at which if the market comes down too much, you tell the broker that no, I don't want to lose more than this level. So they should close the trade for you when the market actually is going down too much. So you set a level for the stop loss level price so that when the market is now going down against you, it will go against you more than that particular amount. And that one, you calculate it based on your lot size that you are using. The lot size is telling the profit that you're going to aim from the trade that you are taking. At the same time, it also determines the loss that you can make during that particular session if the market should go against you. So when you are choosing your lot sizes, I always emphasize on the fact that lot sizes determine your profit at the same time they determine your loss. And they must be choosing in relation with your balance. I don't know whether you have your pen and paper with you, write them. Always lot sizes must be choosing in relation with your capital balance. So if you have deposited, let's say $100, and you want to use a lot size, you have to understand what lot sizes are before you enter the market. And before I move into that area, let me first finish with support and resistance. All right. So if you come to the support level here, so this area, the price was moving down, and now it got here, it got supported, and the green, the bullish candle has taken over, and now the price has moved to the top. So this is what we call support level. Now let's look for a very nice resistance level as well. Okay, in the market on this particular H1 chart. So now let's take our distance to the top here. Now you see that the price was moving up, got to this level, then it was not moving up again. You see that it started going down, but I want to get a very sharp resistance level for that chart. Okay, so let's take this one. Let's take this place where the market was going up from here to this level. And as it got there, got resisted. You know, when you are climbing up, so that in the forces that will be pushing you down, resisting you. Don't go up, resistance. So they'll be pushing you down. That's what we call resistance. So resistance always occurs when you are climbing up. When the aeroplane is in the air flying, there are resisting forces against it. Come down. That's what we call it, resistance. The resistance always takes place when the price is increasing, and then those forces come back and turn the price down. So those areas are very important as when we are doing our trading. Because when we mark those areas, it means that when the next time the market is still going towards that area, remember that there was a resistance, there was a force that was pushing down. So always that the market has a memory. So as the market is still approaching that similar level, watching where they have been resisted area, then they will start testing that level. So in that case, when the market, the price is approaching that resistance or support, you are watching to see what is going to happen at that level. So that is when you scale down to the lower time and see whether it has been rejected or not, and enter that direction. That's a sharp entry. All right, but before then, let me. So the resistance actually is displayed here. First, the price was moving up, got here, and then broke it down, was resisted, broke it down. Actually, so that place has become a resistance level. So when price is going up towards that direction, so remember that, for example, look at this place. Scenario here. Now it was moving from here towards this level. As it was going, remember that there was a resistance at the top of it, so it could not approach the gate. It got here, it got broke down. downside. So that's what actually the market does. It remembers the previous. So when it gets to a point where it has broken that level, they will call it a continuation of the trend. So a breakout of that particular resistance level. So in this case, if this level is the resistance level that we have spotted for our resistance level. Now the price has broken. Now that broken at this particular level. At this place. So when it got to this place, right? Pressure, this will like upper side. So when you mark this level and it has broken like that, it's telling you that the market is going to sharp fire up also continue with the bias and will make something in that direction. That's how beautiful the whole thing is to support and resistance level. When you spot a very strong resistance level and that is broken, that tells you that follow because the market is going to go up for some time before coming down. Follow the bias. Or if it's to the downside, follow the sellers actually. So money out there. I hope you guys understand who is getting something. Somebody should say something. Who is getting something or nobody is getting it? Go over again. Go over again. I should go over again. Yes, please. Yes, please. Okay, so is it on the support and resistance? Okay. So Mr. Eric says I should go over support and resistance. Yeah. As I was saying, the support and resistance, you can see that even before our three moving averages will cross, they must have respected a support or resistance level first. You see that at the resistance level at the top here, the price actually respected that level before even the moving averages started crossing at this level. So at the time they were crossing here, that's even reached a level that you are saying you know that it's going to shower down better. But for you to catch the move early, support and resistance levels can give you a big time. So because you always use the support and resistance levels to control trend lines. Yeah, for support and resistance levels to give you where the prices are the best the period. So you mark those areas that they have been best. As the price is going up, where the forces active on it, that is going down. You mark those levels and then find out what actually is happening as the price is coming towards that level. Is it going to reverse? Is it going to obey the previous trend? Because when we're talking about trend, it means that the market is moving towards one direction, either in the upward direction, and create what we call higher highs and higher lows. So if it is in the uptrend, then you should see a pattern like this. Let me just do a pattern for you. Let me just do a small pattern for using the arrows. So you see higher highs, and it will going up like this, then turn back again small. There'll be resistance small, but you see that when it is turning back, it will not turn back and come and cross this one downward. It will just end on the way. That is what we call. So the point at which it got resisted here is what we call the higher high. Then the point at which it is here right now, the point at which it has reached here is what we call the higher low. So it will continue again and then move in the upper side. So it will now continue again. And this one, because it is in a higher high, this one will not break the downside. It is now going to move above the previous resistance. The previous resistance is going to be broken. It's easy to be broken because the market is what in a higher high. Then it will also continue in that pattern again to get to a certain level, and then it will get broken now again to get resisted. But it cannot be resisted and it will come down. Maybe at times it can come down. That means that the trend has changed. But if it doesn't change, then it will still be resisted. So now, what do? If you see this pattern, just take your trend lines and then you mark where it has actually been. So now when the market is from here and it's coming down, you are watching it as whether it's going to respect this level or it's going to break down. See that going now? That's what we're talking about. Oh, who is getting what I'm doing here? Who is seeing it? Who is seeing what I'm doing?
Very, very, very clear.
Now, these guys want to remember the money. Yeah. So now, as you see, it's in an uptrend. So now you are watching. You draw your trend line. You mark the previous support level, so and it's in high high. So you're watching it from this. So this you're watching it from the high time frame on the H1 here. You're watching whether it's going to reverse here. Maybe when it gets here to reverse, or when it gets here, it's going to bounce back. Are you getting the point? That is the picture. Oh my, we're getting the picture now. So right now, if you see it coming down, and then you scale down to the lower time frame like the M1, let me just say M5, M15. So let's say M5. You see that it's in a constant uptrend, and so right now the market has actually come down. It's trying to go back to where it was coming from. So it was reached here. See that it has respected a certain trend on the higher time frame. So right now it was coming down constant. You see that the bearish candles were strong. Yet when it got here, look at how the candles have finished. That means that the price is likely to go back to the upper side because it's respecting a trend line on the H1 for it, because the market is a constant. Maybe you can start to cross down here and come down, but then look at the trend line I've drawn over here. It's likely to shoot up in the upper side more than the downside. All right. So that is how the market actually moves and how it works. Very, very interesting. Who has found this one interesting? Who has found it interesting? A question about this one. So support and resistance for you to know higher highs and higher lows. So you know what it means that the market is trending up and it's also down. When it's trending up, it's creating high. That means that a higher low. That means that when it is going up, it will not come and break the previous support again. When it's coming towards the support, it will then reverse to the upper side again. So that gives you a higher low. Then it's going for a higher high, come down for a higher low, go high until it got exhausted, and then actually goes into maybe comes back and smash the previous support levels, put down, like what happened on the day Friday. That's what actually happened. That's what actually happened. So this trade is still moving. That's a demonstration trade for you guys. All right. So how many of you understand support and resistance now? Okay, if you doesn't understand, let me know so that which area you don't understand.
Me, I don't understand. Me, I don't understand.
Who is that? Who is speaking? Who are speaking right now?
Yeah, it's me. It's me.
Mohammed. It's who? Mohammed.
The network is open. That is why I'm unable to get surprised.
All right, but obviously, what I'm explaining this evening is it's not a difficult thing altogether. It is how the price always tends from when the price is moving up, how it tends backwards, and when the price is also moving down, how it tends to the upside. That's all. So the point where it is moving up and it returns downwards, that is what we call the resistance level. And when it is going down, where it's actually turned upwards again, that's what we call the support level. Did you get a picture there?
I get it. I get it.
So that's all that you're talking about. So support and resistance level, they are very easy to understand. When the price is going up, aeroplane is going up, it gets resisted in the air, then it starts coming down. When your bicycle, you are on a bicycle, you are falling down, the price is falling, you need a support so that you don't fall. That's all. So that's why we call it support and resistance. Is it clear?
That's okay.
Maybe you have to watch the video later if the network is not helping you now. So that is how. Is anybody who also have any problem with support?
Okay. Okay.
Is anybody who has any problem with just identifying support and resistance again?
So the point of resistance and support is that the point where you take the trades. That is your entry point.
Yes, the point when the rejection is taking place. That's the point that you can take a trade.
Oh, okay.
So if it's at the support level, you scale down to normally that's why we are doing top-down analysis. So when you see it on your H1 and it's already approaching support, see, this is a trend line I've drawn here based on previous support levels, like this one and the one here. So if there was a support level here, there's support level here. So based on this trend line, if the price is moving down towards this direction, I'll be watching it. Whether it's going to, at times it will not reach it at all. It will just reach somewhere here and start reversing to the upper side. And start reversing here. So now, as it's approaching this level, I'll be watching the lower time to see whether there is a bullish candle. Look at it. on the M5, it has already reversed. So the lower time frames have already shown a sign of reversal. And that's why I told you guys to read the candlestick book. How many have read it? How many have read the candlestick book?
We are on it.
So you see that as I was at that time when this red when these small candles were forming, I was saying that it was showing that now the market is going towards change direction because there are weak bearish candles forming over here. Like has given the power to the buyers to now go up. You can see that now the price is now moving up. Now you can see movement to the upside is stronger. So the bearish movement has diminished. Now, when it was starting from here, the bearish movement from here, this way, has diminished. Yes. So when you get to the level where the movement is diminishing, watch the candles that are forming. And that's why those of you who refuse to read the candlestick analysis book, you are going to be missing your entries very well, because when the market is reversing, you wouldn't know the candle that is showing you a strong signal to enter. So you can see that the bullish candle that has formed here has engulfed everything. So the market is just moving up constantly because it's going to, because the bullish candle here has shown, and this is happening on the lower time frame. On a higher time frame, you have seen that it was approaching a particular level. On a higher time frame like H1, you have seen that it was approaching a particular level, and the market is already in a constant uptrend. So for me, I'm taking the trade here already because I know that it's a constant uptrend. So it's up. So I bought that particular currency pair. I know that the price must surely move to the upper side. So if I want to take a trade, the only thing I have to do is that I'll come down to the M15 or the, let me say, M5 and find whether there has been a respect of the trend already towards the upper side. So if it is that, if that's the case, then I enter my trade based on the lower time frame. And the perfect entry. Perfect entry. So it's going to, because it's going to create another higher high for me. And as it is creating the higher highs, my trade is still at a down here, enjoying more for me. Now, if the trade should draw down a bit, that is when we set up our stop losses. So if maybe I expect the market to go up, yet the market is going down against me, I'll tell the broker that, okay, broker, if you should go down and reach this level, close the trade for me. It reaches, I don't want to lose more. So it reaches this level, close the trade and keep my money in my account. So that's why it's not easy to grow your account if you are going by the rules. So you are going to determine before you enter the market, okay, you have $100 plan. It's okay, every good trade. If you go to place a trade on BTC USD, every single trade, how much are you going to actually place on trade or risk that trade? That is the risk element. Then you also look at how much if you place that risk, how much reward you expect from that trade. So it can be 1:3. 1:3 means that if you place out of your $100 account, you maybe say that, okay, on that trade, you are risking only $10 out of that trade. If you are risking only 10, if your risk to reward ratio is 1:3, it means that your reward should be because you need to buy times 3. That's all simple, isn't it? Simple. That's the risk to reward ratio. So that is your big profit at the level where you will get $30 at the end of your trade. And this we have done the calculations previously, and we saw that you can do this as though your lot size its equivalence in the dollar, because all the lot sizes are in dollar. And for you to know each lot size in the dollar, what do you do? Can somebody tell us something? If you want to know the lot size and its equivalence in the dollar, what do you do? I think something was posted on the platform this evening concerning the lot size and its equivalence. So when it happens like that, you find out exactly what you want to do. Now the market is approaching, the M1 has crossed, so it's likely to come and cross my my trade over here downward, because when this particular indicator, this particular moving average, the moment it crosses like that, it's very dangerous. When you are watching it and it crosses like that, you're watching very carefully, unless of course maybe there is some strong support there or stuff like that, then to respect it. But if not, you see that it just come and take you out of the trade and just go down against you. So when it is crossing initially like that, you're watching it and you see what is going to happen to it. Because these indicators, these three moving averages, they are very strong. Very, very strong. You guys know them already. They are very strong. So unless of course they are respecting a very strong resistance or support levels. But sometimes they don't respect. They are very stubborn. They don't respect, like gold. Last week, gold. They never respected any support and resistance level. And you see what is happening on the screen right now. What? You see what now? You see, guys, the thing is strong. who is in the thing?
What is making it that strong? Is this some news that is pushing it down?
That is why the indicator on the screen, our indicator we are using is very strong. The indicator is showing us already that the moment it has crossed, the three of them have crossed downwards like that. The three moving average crossed the 10 moving average, and they are all crossing both of them are crossing the 50 moving average towards a direction. It's a very strong move. So when you enter a trade, know that it is going to cross your trade in that particular direction. So right now, look at it. When it crosses, it's a sharp move. So if you are able to take your trade at this level, maybe you see the resistance over here and you take your trade here, you're going to move downwards in the direction. So as it's crossing here, come and watch your M5 and see it's also moving towards crossing. Look at it. So guys, that is how powerful the indicators are. These three moving averages, don't joke with them. Last week, we were trying to go against our moving averages, and the moving averages whip you more than you think. So all of them were strongly coming down, even on the 8-1. Yet we were looking for position against them. And because originally the trend was in the upper side, yet there was a 10 of the trend. That was when the Friday was the time that the trend for the gold was turning downwards. So we were still taking a trade in the opposite, in the direction of the trend and the previous trend. But the trend itself was changing that Friday. And that was how come some of the trades had to be in a limbo. So now you can see that the M5 is also crossing downward. So something dangerous is on the way. I remember. So guys, yeah. So you see that even as at this time, the spread is a bit higher than normal because I told you what the spread is. The blue line, the red line, they represent the ask price and the bid price. And the ask price, the price that the broker is willing to sell the asset to you, the trader. And the price at which the broker is willing to buy from you is what the bid price. When you see your quote table, your quote table shows that the bid price, the first price column, that is, you have three columns here. The first one is the asset, second one in the middle is what? Your bid price column, and the third one is the ask price column. So the ask price, the bid price column, which is the second column, is always lower than the third one, which is the ask price column. Because it is logically your broker will always want to buy from you at lower price but sell to you at higher price. That's what happens. But this is their chart. This is the broker's chart, so it's normal in every market. That's how they also make some money out of the business they are doing. So what you look out is that when you are looking at a chart, so guys, look at where it is. It's now against us. Is it a point now? Because I saw it, I told you already that it's going to go against us because the things that were crossing right from the M1. See now look at the M1 now. Don't joke with these indicators. Who can testify to these indicators? These moving averages. Who can testify? Yes. Yes. So when you see them crossing from the lower time frame, I tell you, you have to respect them. Otherwise, you make a trade against yourself. So when you see it crossing on the M1, you're watching it, you are able to take a trade in the direction of where it is crossing, you are good to go. Just leave your trade and you're watching it, and then you follow it on the M5 and see it also cross on the M5. Then you accumulate, then you see it and you follow up on the M15. Don't be crossing there. So, oh my, it's going to fire. And these averages I gave you, they are very, very strong. So they will move down for some time before you start reversing again. At times, it changes the footprint as they crossing that as it crosses from the M1, crosses on the M5, crosses on the M30, then one, boom, just crossing like that. And so the whole thing changes that direction. So whatever is happening, whether it's a news or whatever, the indicators from the M1 will be giving you signal that something is happening. Something is happening. Watch. So as they are crossing like that, you are going to get an indication even faster than anybody. Now it will start going up a bit, looking at what actually is happening here, maybe, but it's still strong in the upper side. But when you look at the stochastic has reached overbought. This is where stochastic doesn't really have any strength. Stochastic can show you some things yet because the moving averages are strong going down. But it's showing a sign of reversal here because look at the candles that are forming at the base here. They are now forming some bullish candles, though they are not bullish, but yeah, they are forming because they are forming wicks at the down and bigger heads at the top. That shows that the potential, the buyers are trying to push the candles all the time when they are moving down. So it's showing that maybe the buyers will enter the market small before it shower down again, or they will take it over completely. All right, so that is, I don't know. Look at how the M5 has actually proven the whole thing. Look at it. Look at the candles from here. Look at it. That is how powerful the indicator is. That is how powerful these moving averages are. Enter the trade according as it is here. But these are the things that actually change this trend. And you know, it's I know that it's crossing downwards here, but now you are seeing that on the M, okay, let's say M15 or M30, you can see that it's moving towards the sub levels here. So you're watching it. Now you can't tell whether it's going to reverse over here or not. Now that you're watching it, and see how it will go, whether it will reverse or not. Now the reversal is trying to happen here. Now you can see. So this is where you can take a trade. Now look at it. The reversal is trying to take this over here based on the M1 over here. So this is where you can take a trade if you want to enter the market. Now the spread is very. Look at it. Somebody should calculate the spread for us. The spread is very, very high for you to enter. That's why weekend trading is quite not advisable. So let's watch this particular candidate is forming here. It will be a very strong bullish candle that is going to reverse. And very soon you see the red line there below. You're crossing the violet line, the upper side, and going to fire up again. I'll get to the point. All right. Now you can see that even the awesome oscillator has hit the lower band there, and it is now forming green lines. So obviously, it may mean that the market go up. So maybe if there's a not take a trade, and since on the H1 we say okay, it's a very nice, but the H1 is always in the uptrend, it's not coming down low this level. So obviously it's a sign that the reversal has actually come on the M1, as you can see. On the M1, this is telling you that the reversal has come, and especially when the red moving average here, which is the 3 moving average, crosses the violet, which is the 10 moving average, to the upside now. It's telling me that it is going to shoot up. It means that it has gotten a support here now. It has gotten a support here, and it's going to fire up into the upside. Guys, you are seeing the picture. That is the trading we are talking about. Simple. Okay, who says this one is rocket science? Someone tell me this one is rocket science. Is it rocket science? Somebody should tell me something. Let's see where to cross it on. If it crosses it, you will see that it's going to go up in that direction. This one is not rocket science. You are seeing everything live on your screen. The moving averages are giving you a picture of the market, how the market is moving, and whether the market is going to move down or whichever. So now you are seeing everything on the screen. You can see it as cross. If somebody says something, or I'm the only one saying something, you guys are not talking. You guys are not talking. Or our network is off.
I see a little reversal.
There you can see
a little reversal. It looks like it's coming down.
Okay. Oh, that's a OTAP. OTAP.
Yes.
This is my first time seeing on live here on.
I'm currently in the US.
This session. Okay. Are you where now?
Yes.
Okay.
Yes.
Okay.
Yes.
Okay. You are having challenge with the excess.
Yes.
Okay. They said okay. All right. So the US, obviously I tried checking their system of operating
Yeah, it's different.
here where it's very good. There are a lot of rules governing their systems, and you have to go through a lot of issues before you go. That's why most of the brokers don't really want a client from that place. You have to suffer a lot before you are able to register a broker. So requesting for so many unnecessary things that actually will piss you off and you wouldn't really want to trade again. But I don't know. I think obviously, but when you tried registering the XNES, what was the response?
I think is it PM or something? Yeah. It wasn't giving me access to the registration.
Doesn't give you any access at all.
Yeah.
Okay. So no access have been given to you in that direction.
So So let's somebody with an account creates an account within his account for me. That one be possible.
Okay, that means if, but since they are not allowing you to even can you log in, they are not allowing you to register. Can you log in?
Yeah, I think I tried logging in on somebody's Life Forest account. I could log in here.
But Life Forest is not accepted over there.
I don't think so. Yeah.
Well,
I haven't tried that one.
Yeah. You haven't tried the Life Forest over there. There is one that I was trying to bring to you, forex.com.
Okay.
Yeah, it's a very nice one, but just that their processes to have straightforward. I don't know what that is. I mean, their regulations and stuff, I mean, they're very strict and it doesn't really make sense.
Yeah. So
by the time
we might figure something out.
But yeah, right now you are unable to do any demo trading and all that.
No.
I want to find out whether I can get a very nice one for you.
Okay.
Very nice one for you, so that you can actually. So that's that. Obviously, as you can see, it was trying to, 10 efforts trying to cross the outlet, and then it got broke down over there. So, but since it's coming to respect this particular one, but you know that it already is in a very constant, it's now crossed downwards from the top here. So the pressure to the downside is there. That's why I could not cross the violet over here to the side. But if you're able to cross it very well to the upper side, then you can see that it will just go up again. So now you'll be watching whether it will respect this level and then go back, or it will not respect it and then maybe crash down to the downside. So there are two things involved. That's what you watch, whether it will respect it and go down or not. But you know, on the H1, it's still constantly going down, telling you that the potential of coming down, that it hasn't hit the major support level here yet. The trend line is still far away from the candle is forming here. So obviously, what you are seeing on the M1 is just a picture of what actually is happening here. So it simply means that the market will not reach that level before it reverse, or it will still come down to that level. Yeah, so that is what actually we are seeing here on the screen. So the M5 is also talking about what, but the potential to go down is high, because if you look at the awesome oscillator is also now pushing downwards. You can see it pushing downwards. Okay, so the awesome oscillator is also that on your screen, and you pick your listing. Actually get a picture great. So the awesome oscillator, M5. The awesome oscillator is also going down from the top there to this level. So the stochastic is trying to show, but stochastic wouldn't be from here because the pressure to the downside, based on where the moving average is across to the downside, is going to push the price to the downside a bit. All right, so that's what actually is happening. So when you see the crossing, it's actually giving you a picture that the movement to the downside or toward that direction is very strong. So you can see on the M, something of the sort is also happening right now, and it's likely that the towering to the downside. You can see that the momentum on the M15 towards the downside is very, very strong. Very, very strong. So, guys, that is how it is. Now, you can spot your support and resistance level. You can actually do your analysis from higher time frames and check where the market is moving and then take your trades in that direction. So now, as you see the candle falling here and falling here, if you are a lion waiting for the market, that's wait for the market to reach this particular level. This particular level. When it reaches this particular level, as it's coming down, then actually where there can be a strong investment. Consider the dropping of the candle on the H1 is still strong right now. It's chasing this trend line over here. So don't worry, it hasn't reached the trend line yet. So when it breaks down, you know that okay, now it's going to crash down to the downside. But if it gets rejected over here, so as you are watching here, it's approaching here. You are watching your lower time frames as well, the M5 and the M, whether there's a bullish. On the M5, there's no strong bullish candle that is a Galvin candle forming. You can see that it's still pushing to the downside because the moving averages have crossed here and it is strong to the downside on the M5. And even on the M15, it's still crossing. So that's why you are seeing the long candle forming over there like that. You know, the M15 crossing downwards, showing a very strong movement to the downside. Guys, that is how this indicator is. So until you see a very strong bullish movement on the M5, you don't go in for a buy because the direction to the downside is too strong. The bearish movement on the higher time frame is still dropping and it doesn't reach saturation level to start buying. Maybe there will be a little retracement which can deceive you that okay, it has started. But make sure to confirm that on the M5 and the for actually you might see the M1 trying to go up like the way it happened here before. You see that because it's not a strong reverse down, it's happening here like they wanted to go up a bit. It wanted to go up, and then it couldn't cross the violets or the 10 moving average, and then it was struck down the downside because the potential to the downside is very, very strong. So until we see a very strong movement of change on the M5, where there's a bullish Calvin candle or stuff like that on the M5, confirmed by M15, then by trade. Sometimes I can draw, you can draw in between trend lines that will connect the two and see whether perspective or not. So even I think between trend line hasn't reached yet. It hasn't been reached yet. That's why it still has the potential of coming down. Let's see whether it will respect this in between trend line or not. If it doesn't respect it, then we'll be looking for the H1 trend line because now they are all crossing downwards, which shows that the momentum towards the downside is very, very, very high. The pressure towards the downside is very, very high. Yes, the pressure towards the downside is very, very high. So now we are about to close this evening session. As I told you, by 7:30 we are closing. We have another thing somewhere. So this evening you have understood. And you can see the power of the crossing of the three moving averages. This one we are seeing it live on your screen, how it's crossing right from the lower time frames through the mid frame to the higher time frames. And you are seeing everything yourself. So it's informing you of what is going to happen in market. So as you are waiting for a buy over here, confirm whether that is respected. So the trend lines that you have over here, connecting your supports, your trend supports. So here, there is no on the M5, there is no indication of a bullish movement. So you can't go for a buy right now until you see a strong bullish and you form here. And you are sure that now it has respected the trend. So it will fire up the opposite direction. But right now, the three moving averages all crossing downwards. They show a strong direction to the downside. And when there's a very strong bullish movement over here, that is going out and covering this one, then showing that obviously it has respected the H1 here. The reason why you need to take from the H1, considering the H1 or the higher probability, when you shoot up from the possibility of it going up higher because it's already a higher high. So the way it's respected and going up, you shoot up higher than, so that's why you can make more profit than that's going at the trend. Because you know that the higher highs always break the higher lows to go upper side. So you don't really worry about it. So just wait for the market to reach its level of movement. So there's some level of change in the market on direction at this level. You see the candle that is formed here, there's some kind of thing that is showing, but then you look at it very clearly, whether it's blue or it's just dust that is showing into our eyes. It's red dust into our eyes. So you want to see a very strong bullish movement on the M5, M10 or for enter for a buy. But apart from that, we are going to wait because it is likely to break or reject it and go to the upper side. So now, if you want to risk, I told you already in that video how to protect your account or your capital. You saw everything, how it's calculated. If you want to, let's say, risk $10 on your account, how you calculate it so that you know the number of things you actually add to the current price at which you sell the market, where the at which you set your stop loss and all that. We calculate that obviously. So you watch those videos very well this evening and then get into the market, go to the combine with what we have done on the screen right now. So the moment towards the downside is too strong. Let's see, it is moving towards the inner trend line from the, let's see whether it gets it doesn't tend to shower down. It come and hit the major trend line over here. Yeah. So if you see the M4, M H4, all lines are actually for the H4. Yeah, it's approaching our what you let's that level. Get to that level. That is how it is. That is how it is over here. I can start to draw your trend line from here. Actually connect it here with let's say another video. Whether it can respect, it doesn't respect it, then try to respect the next one that will come from it. And then you wait for that one to actually happen. That's normally what happens in the market. So the market, you can just deal with trend lines and then you are good to go. I mean, trend lines alone market, how market actually goes. Like, so something actually is happening right now, and we have to watch it very carefully. But there is no clear picture of because there is no strong bullish candle forming on the M5 or even the M15. Before a bullish can form on the M15, should have formed on the M1, and the M1 should never form anything. So press to go down. Yeah. So if it forms on the M1 and then it follows up on the M5, then it's giving you and hit the M. You see how it is. As I told you, three major ones you're looking at is what? Is what? H1, M30, then M5. Oh, sorry, 15, sorry. So what then? We want to enter the market. All right. So if there's any question to ask, if there is none, then there's the third for more profits as we continue our lessons. All right. What is any questions? Look at it. The crossing has actually given its power. Just moving up, moving down. That's the power of the three averages. As they are all crossing right now, it's likely that the support level here it's likely that this support level here can be broken down into pieces away. But let's see what happens here if that increase here. Increase with this. With this, let me see whether it's agreeing with it on the lower time frame. Still, there is no strong indication, so still wait and see. No strong indication on the N5 or the N15 and stuff. No bullish movement to show that it will go up. We want to see a confirmation. So as we see it approaching, this middle, this kind of trend line that we draw here, we want to see whether there is a bullish movement forming on the M5 and the N15 thereabout. That bullish movement is not strong, then just watch it until see a bullish movement forming. I think the M1 is given as a picture of something right now, which we must respect. The M1 is given as a picture of something right now, and you can see where the M1 has reached is in an higher high right now, and showing that it's likely to cross the upper side. And that's in this particular direction. Take a trade. You are likely to spot a position at the right place and then make the right entry at it. So if let's say you take a buy here right now, you take a buy. Now look at the other one. You take a buy here right now, and the market goes in the direction. Let's assume, let's do that. Okay, it has respected the trend line at down here. Let's believe now it has respected that trend line. Then that means that it's going to fire up in that direction. That means that it's going to fire up in that direction. And that is if it has respected the H1, this particular middle point trend line that we have drawn here. It has respected it as we have seen it now. Then you can see that we saw a bullish movement already on the M1. Have you seen it? So the M1 is now telling us something critical. It's telling us something critical. And then the M5 is also struggling to tell us something. But you see this candle that has formed here, given us a picture of something. So wait and see whether it can crash below this particular line. It's a strong movement for it to go and go up that direction. If not, then it will crash down and chasing this particular trend line again. So that is how it is. So would it be the fact range, and then it is now going to go in the upper side? Maybe it's respecting this particular trend line. That's why we are seeing what is happening on the lower time frames or stuff like that. So we'll have to wait and see what actually is going to happen through the trend lines over there. Is it going to respect this? Because this zone, there have been some previous rejections over here for some time. You can see from here to here. There have been a lot of rejections severally. There have been a lot of rejections severally in this particular zone. So you will see there have been a lot of rejections in that particular zone. So it's likely, so there's a stronger confirmation that this particular may also respect if possible, but it's not a reality until we see what happens on that particular line. All right, so that is what you are seeing right now. So it is right now in the zone where it is likely to break down or respect that particular trend. So you watch it and see whether it is going to break down into the decision point now. Is it going to break down or it is going to reverse to the upper side? So that's where the decision. That is where the decision point is. That's where the decision point is. So as you come to the lower time frame, and watching the kind of how the angles are forming. Maybe if you want to be entering your positions as it's going down, you are buying and see whether it's going to respect that. So right now, the market is in a state where you can't, you are looking at it whether it is going to cost down or because already the M15 has crossed downward and the potential to the downside is very, very high. So that's why when you are entering against even the moving averages, you have to be very careful. When the moving averages are all crossed like that, then you got to be careful. But it appears it is respecting that level that we see. It appears even on the M5, it appears to be respecting that level, but it's still going down in that direction. So until we see a complete movement, bullish movement on the M5, we will actually let's see whether now you see the trend line is just below this particular level. So is the M5 also going to respect this level? If it respect it, then that's nice. Is the M15 also going to respect it with a bullish movement? If it respects it, then that's nice. But now you can't really tell. But it's a zone, it's in the zone already. All right, so any question? Any question? Any question? Or everything is well understood for a bit? Am I being here or not being here? Or I can hear you. Any question? I think our time, so I'll be with you guys, and then you watch the video. Question. Okay, so that's very, very powerful. That's very, very nice. We thank God for this session, and then God willing, tomorrow we'll continue with. So tomorrow is going to be and then you apply all the principles, the stop loss. When I said stop loss, go back how to protect your account video, and then actually watch that. The moment the downside is still very strong, like so it's likely to break down this line downward direction. But the long wicks over here are also showing a diminishing downward movement on the one. But then see what actually will happen to you. For M1, you will not give any picture, but the M5 is showing a diminishing downward movement, which is in respect of the trend. But the M15 also have to confirm it is going to respect this small vertical line or crashing down. And since it has come because it has crossed here, it is crashing down. Go in the upper line and downside. Yeah. So that's how it is. That's how it is now. The stochastic and the friends are also pointing down on the end. And it's also showing that the likelihood of it crossing downward is also very, very high. The likelihood of it crossing downward is very high because all the moving averages have also crossed downward. Okay. So now it is traveling over here as whether to this particular trend line or should go with the moving averages. That is what it's up. But the trend to the downside is very, very strong as the moving averages are pointing out. All right, so let's see what will happen to it next. All right, so go with you. Don't forget, pray all the time and focus on the results. Amen. Bye bye.